Welcome everyone to the Kendall Report. It is Wednesday morning and we've got basically some down markets again. We're still seeing a little pressure, and before I get into today's broadcast, please make sure you hit the like button and make sure you hit the notification bell and subscribe. So let's talk a little bit about what's going on. The headline of this main topic I'll be talking about today: the Fed still hasn't broken anything, and I'll discuss that in a little bit here because I think there's some interesting things going on. And I'm also going to go and cover the yield curve today. I've been talking to you about that, so I will be going through that as well. Just taking a look at some of my notes here. Retail sales coming out, a little better, even though Target missed big time, and they're down like 14% last time I looked. In fact, I'm just looking at the top list right now. Surprised they're not on the top trading list. They aren't at the moment. But the markets are continuing to try to digest the rally that we had and making, I think, some consolidation before we move higher. So let's go ahead and go through the market grid stuff first, and then we'll get the opening set up. And we'll see exactly what's going on. A typical pattern that I'm starting to formulate. I'm still looking for comments from you folks for guidance on what you'd like to see early in the morning like this. I have to tell you, I miss the evening shows because it really gave me an opportunity to get ahead of the market a little bit. So I'm still basically trying to figure out what's going to be the best thing to do here in the morning. So we'll stick with the format we've been going with. I think it works pretty good. I hate not having you folks set up a little bit better long before the open, not just a few minutes, because a lot of stuff happens overnight, as you know, and I kind of miss having that. So not going to do two shows today, but remember, next Sunday night there will be a show Sunday night, no live show on Monday. So I'll keep that out so you won't be surprised when there's no show. There will be. What we'll do is we'll premiere that Sunday show at 9:15, I think is the plan. So just looking around a couple things here. Like I said, the futures, let me get over to a different page here so we can get set up for the market grid as we come into the day here. So let's go ahead and get up on here and take a look. One of the things that's happening, which is interesting, we're getting right below the 200-day. If you notice, I'll expand the market grid up a little bit, but we're getting this basically a formation, which I call a dragon head, right underneath the 200. Typically, the dragon heads resolve themselves to the upside, and it's a formation, and we also are seeing the market grid tighten up a little bit here. So we're seeing volatility contract. So we've now had, let's see here, the better part of 4 days in a reasonably small range compared to some of these big days that we've had. So we're seeing the contraction of volatility on a daily range basis, and that's causing everything to move to tighten up here. You can see PPM1 is at a plus 0.56, big time trend mode. Been talking about that. We'll go through the algos and everything here in a few minutes, but let's take a look at the projected ranges for today. I'll bring the tabs up on the screen here so you can see them. Right now we've got 40.15 high, 39.80 low, S1 39.83, R1 40.15. So if you already have these indicators, you know that we already hit R1 perfect. S1 R1 has been printed. So the question is, how will we expand that? And I'll be able to look at the algos here in a minute. I looked at them a little bit ago. They're kind of stable, actually. They're not really telling a lot, but we'll take a look and see if anything's happened in the last hour. I looked at them about an hour ago, so we'll take a look at those as well. But yeah, so right now, R1, R2, I'm starting to believe that we're going to see the potential for a move back to 40.50, 40.33, which would be an R2 move. So look for an R2 right now. We'll go through the algos here in just a few minutes. Bring up the NASDAQ futures. The same pattern that's out there here as well. We're looking at R1 is 11,972. We've had a print high of 11,963 so far. And we're looking at the low right now of 824 and S1 836. So we've been just a little bit below S1 and a little bit below R1. So same kind of thing. I think we're going to see a little bit of a bias. One of the things that hasn't happened yet, basis the S&P, we haven't seen a close over 4,000 yet. We've been trading above there, but I want to see, especially on the cash, we want to see that close happen. And I'll go through, like I said, all the targets and everything as we get through today's show. See what time are we getting to be here? We are at 24, so we have about 6 minutes to go. Let's go to the RTY, and then we'll just set up some of these things that are happening in the Treasury market as well. That's going to be somewhat of a feature today. Also going to dig into, since this is kind of a halftime report. It's the 16th of September, so we're looking at midpoint in the month. So that'll be something that we'll have to we'll update here, just how the month is going. So we'll maybe look at a couple monthly charts. We'll do that in the second half of the show, just at the top of the hour roughly. So as we get through, take a look at RTY, the high 03, R1, same configuration across the board. R1 1902, S1 1884. We've been 8203, so R1, S1 there as well. And so just look for these numbers that are on the page here that I've got up on here. I know I never pay attention here. I need to move that over just a little bit, but nothing's really protected. We still have upward projections on all these daily charts. There's still a overall positive view of the trends that are unfolding. Like I said, we've got just about PPM1 across the board. PPM2 on the RTY is all really positive. And so, we're just going to see this thing continue to go up. Let's go back over. Let's go over to this screen here. Just want to take a look. You'll see over on the far right-hand side here is really the treasuries, and they're plummeting. When I was talking to you yesterday that, treasuries going down to 374 seem ridiculous. Well, we're 372, and 350 may not be out of the range at all. That's why I wanted to go and talk a little bit about the yield curve. They're going crazy on Bloomberg this morning because the 210s went to the widest range ever. You guys know I don't really care much about the 210s. They don't mean much to me, but I wanted to look at the overall curve here later when we go through the treasuries. I'll bring that up and go through it there. Just looking across the board at some of the things that are happening here. We'll go and take a look at the list here. I kind of trolled Warren Buffett a little bit on Twitter yesterday. He's doing another pump and dump on the TSM. It's just amazing what that guy gets away with. He's no SBF though. We'll give him that. So I hope none of you have been hurt by that situation. It's pretty ugly. Bitcoin down 429, struggling to do anything. It's going to be tough. Bitcoin's probably going to have trouble for a while. Looking at gold, there's a little bit of a bid still hanging around 1780. I'll cover that as well here in just a few minutes here. We get about minute and a half to the opening. Just looking at what some of you guys are saying here just real quick. Yeah, why don't you start at 9 a.m. because I don't want to get up at 4 a.m. So, yeah, this is about as good as it's going to get, folks. It takes, I get up at 5:30 to be here at 7:15 to get everything done and research done. Takes a while to get some perspective here. I have a procedure I go through every day, and that's something that maybe that would be an interesting video to do. My normal analysis process that I go through every day. It keeps me very consistent. I've been doing the same thing for decades, so you can't teach an old dog new tricks, so they say. We are getting about a minute, just a little bit over a minute. So somebody's saying the VIX should get under 22. I talk about this all the time. You buy 20, sell 31. I think we went to 34 this last time, and that was a pretty good buy. And it just, VIX is a pretty good extreme indicator. It's just sometimes it'll go a little further. So if you know that you're getting into a buy zone, I mean, it was pretty obvious when we were printing down at this last low that markets weren't going to follow through, even though just about everybody was negative there. So we're in about a minute to go. Let me get set up here on the right screen. They'll go over to the level 2 screen so we can see that. So let me get everything out of the way. So we're ready to go. We should get a bell here. There it is. All right, we're printing down at the low, so they're definitely selling into this, about 18.25. Probably get a little bounce out of here, folks. If you remember yesterday, we had another big spike. There's a spike right at the retail sales when that came out this morning. And those of you that have been in the live room, if you notice, there was that scalp trade that I've taught you all off it when the news comes out, where the very first reaction, you fade it. So if it goes down, you buy it, and then there's literally a 2-minute scalp there, and it's almost always pretty profitable. Very seldom, unless it's a giant, big mistake or something like when we got CPI, especially these, I would call them secondary reports like retail sales. They're significant, but they're not earth-shaking. There's always a really good trade-off of there. So we're starting to see that volume bar that I always talk about every morning. We're starting to see that start to kick in, and we'll watch this just for a couple of minutes. Look at the order book. Order book's pretty thin. Usually like this on the open. I've talked about this. It takes anywhere from 15 minutes to up to an hour, depending on the session. Some people don't like the trade in the first hour. I love the first hour. There's a lot of opportunity here. And a lot of times if you're using a multi-varying approach like I do in trading, where we're using hourly down to a 1-minute chart and collating those into some concepts, you can really come up with some nice buying areas, including using the market grid numbers off the daily. Also very good. And with the indicators, you actually have the ability to do market grid on an hour, 5-minute, all of those. And in the live room, we do a lot of scalping off of that. And speaking of the live room, I'll see everybody there at 1 o'clock today. And I am going to probably tomorrow give you some times on some of the things that I'm going to do. We're still getting that little bit of a bid to come in here off of that 80 low that we just saw. Just real quick, I am going to start doing some live training. I believe we're gonna do a simulcast with maybe a Zoom meeting that I'll present on YouTube as well. So we're figuring out the format right now. But Tuesday, 1 o'clock Eastern time, and then Friday, 1 o'clock Eastern time, we're going to do a Wavetech and a PortfolioXpert. So we just got a 10 handle run off of this low here. And yeah, we got a 10 handle run. Excuse me a second. Yeah, we got a 10 handle run there off of that all the way up to 90. So basically in 3 minutes, we got up to there. So let's go ahead and get into the algos, take a look at what's going on there. So we'll go to, we're going to set up over here into the hourly charts. Sort of interesting. What we're looking at is that the 10 period moving average on the hourly is suggesting we're going to be under pressure here. We actually have downside objectives 39.45 on the fib targets right now. It looks like, if you recall yesterday, I told you we're going to be stable for about 3 hours, and then at the tail end of the session that we would get it looked like we were going to get some selling. That's exactly what happened. And these algos are really good at projecting the 2 to 3 bars out. And if you have them on, if you have these indicators, then you'll see where the turns happen, and you can run these on 5-minute, 1-minute charts. They're pretty amazing for intraday trading. But the point is that setup is there. What it's saying today really is that we're going to stay, that 10 period moving average is going to stay negative here for several hours. Right now it's at 4001. So that's going to be a resistance point. We're trading right now, last trade 91. And let me see if I can get any kind of rate of change on this. Yeah, about $1 an hour right now. So it looks like it's going to stay at that. So it'll be 4,000 an hour from now, 99, 98 in the next 3-4 hours. So there's going to be a ceiling, it looks like, on the markets as far as that goes for today. And for midweek, this is pretty quiet compared to how we've been trading. And maybe it's just because of there's really not a lot of news coming out. And let's take a look and get through here, and then we'll start some dialogue around what is likely to happen here. Here's the NASDAQ, same situation. NASDAQ looks like it's going to get into trend mode down on the hourly. So we've got fib targets down here right now. Fib target is 11,682. You'll have to correlate those numbers. I think there was a S2 number was down around that level. So it's possible I was talking about an R2 earlier on. Algos look like we're going to expand to the downside. So watch those S1 numbers that I talked about a minute ago to be penetrated, maybe go down to the next number. Looks like for the moment, it looks like a pretty quiet day. I'll take a quick glance. I'm going to show you a couple things on the algos, and we'll go to a 5-minute. We'll go to the S&P and look at the 5-minute and the 1 minute just to see what the setups are looking like there. That'll give us, what you can do is you can get this hourly feel for what's going to happen next several hours. It looks like we're going to have a ceiling on the market, potential to expand to the downside. Fibonacci patterns are being picked up here that are negative. So we'll go ahead and watch that. We'll go to RTY. Interesting, and this has been happening for a while. And when it comes to the Russell it seems to be ahead. So Russell's already hit fib target 1. Fib target 1 here was 72, low 75. So we're printing pretty close to it. We're 77 last trade right now. So we've already satisfied fib target 1. And the trends on the algos are suggesting we're going to stay down for the next couple hours. Basically what it's saying that the 10-period moving average is going to be your resistance point. Anything over 0.25 on these indicators suggests there's only a 40% probability for the market to trade above those. So you can usually expect rejections off those numbers. And the 21 is a period moving average on any spectrum, whether you're looking at 1, 5, whatever, all the way to daily or weekly. That is one of the primary trend lines, because if you think about it, I use 10, 21, 40, and the 200, but the 10, 21, 40 sequence, the 21 is the middle value, right? So that is what I always call your primary trend, as being indicated off of that PPM2 and that moving average. So what we're seeing here is just that. We're seeing everything rolling over. It looks like PPM2 is peaking out here on RTY, but this is the but, it's going to stay in downtrend mode down. It's at 92 right now. Just give you a value. It's doing about 2 handles per hour. So there's going to be plenty of overhead resistance, coming into 82, 84 on this. And you can use the same analysis on all of these indexes from that standpoint. So let's do this. Let's go ahead and on screen here, and we'll take a look at, I want to have a discussion about the Fed and some of these elements that are out there from the standpoint of what's going on with the Fed. So we'll do a quick little review here, and then we'll go right into the database and all the technicals. And like I said, at the top of the hour, maybe a little bit beyond, I'll cover some of the longer term. We'll go to, when I get into the yields, we'll go through yield curves, so that'll take a little bit longer. So we'll do some, at the end of the show, we'll actually look at some of the longer term and kind of look where we are so far in the month of November. I'm telling you, this month's going to go fast. We got, holidays coming up not too far in the distance, next week actually, right? And that stuff hits. Once that hits, the year disappears pretty quickly. So we're going to have a lot. And then, of course, I've got my annual break that I have coming in the last 2 weeks of the year. So anyway, it's going to go fast, folks. The next thing we know, it's going to be 2023. And one of the things that I have been noticing is that a lot of these folks out there are already talking about 2024. And what's interesting about this is that they don't even know what's going to happen in 23, and they're talking about 24. Listen, I've been around a long time. I've worked in major wirehouse research departments, and if you walked around, there's a few people that know what they're doing, but basically all of the research that you see coming out of, I don't care if it's Goldman or Merrill, or I've worked in Merrill department and others, it's all marketing. Research is marketing, and they don't even care if they're right. They're not even trying to be right, most of them. There are a few people with some integrity, but there's people, just like everything, there's a narrative that is built by, when I was at Merrill, there was a guy named Bob Farrell who was very famous. Farrell ran everything. He decided, he wouldn't let me cover the S&P in any kind of written material at the firm. So it was like I had a group that I was representing, and they wouldn't let me even do that in a private group. So it's just one of those things where that's the way the research world works. So don't put a lot of weight when you see the Goldman and all the folks out there. All this research material is marketing. All they got to do, and it's kind of leans more positive. That's just the way it is. Even all these earnings and everything. I'm sorry, folks, but it's not what you think it is. And I know a lot of people will talk about what they're saying. But anyway, let's get into talking a little bit about the Fed. The Fed is committed. I'm telling you, folks, they're committed to break the employment situation. and they want to see these metrics get hammered, and they're not going to be happy until they do. And maybe it's the right thing, because the employment numbers are a lagging number. So by the time they break them, everything else is going to be rolling over. And I still don't have a strong opinion either way, from the standpoint of is there going to be a recession? Is it going to be really bad, or is it going to be moderate? The consensus is it's just going to be a little blip and it's going to go away and everything's going to be fine. I'm not sure that's what's going to happen. I think it's too early to call from my viewpoint anyway. What I am seeing, and you folks know this, we have generally positive, at least looking, setting up this fourth quarter. It looks like it's going to be able to stay positive, but that can flip on a dime. We saw a little bit of that action yesterday on the missile hitting something in Poland. The news people jumped to the conclusion that it was a Russian missile. And, I was saying, how do they know it's not a somebody in Ukraine that's shooting this? Well, it turns out that looks like that's what it was. And, everybody want to escalate to World War III. And I have to give Brandon some credit here, because he actually didn't jump to that conclusion, at least what was put out on the street, that it was like, stay cool until we find out what's really going on. It looks like it was just, there's a war going on next door. Something might fly and go a little bit over the border, and that's what happened. But the Fed is committed, and my notes here are what I have, is that the Fed is definitely going to stick to this higher interest rate scenario. When I go through the rates today, we'll go through the yield curve, because this is setting up almost exactly what I told you folks a couple months ago, how the yield curve is going to look. What I haven't spent a lot of time on is what it really means for the economy, and I'll start to rotate that out. I've been teasing you for weeks on end about this project I'm working on, and I'm hoping to have it done by next week and be able to show you. I am been famous, and a lot of you folks have only known me for a couple of years. Some of you, maybe of the institutional guys, have been knowing me for a long time, but I have been, I guess, really good at figuring out where the rotation is going to be. And if you think about it, you folks should know too, if you've been around for a while, I was screaming oil and financials in November of 2020, and that was exactly it. And oil has just continued to be a gift that keeps giving. I showed you the agricultural ETF that we hacked earlier this year. That's another 40% gain. So, there's a couple areas that those were like probably the most obvious things that you could have actually went to see, who didn't know there were issues in food and then fossil fuels. So everybody knew that. So there's nothing at all that was really nothing brilliant about that. It just paying attention, building. Nice thing is I got products and strategies that we can build to capture some of this money. So this new thing that I'm working on, I think, is probably maybe a longer term play, maybe a couple year play. So I'll be revealing that to everybody. I'm actually excited. I just want to finish the work. So let's move on. Let's go ahead and go into the database. We'll get into the flow of the show, all the technicals and all that stuff. Quick glance at the markets before we move on. Back at 84, down 14 handles. A lot of pressure on the downside. I think the algos have got it right as far as what's going to happen on from that standpoint. Let's go ahead and take a look at the database. Okay, not a lot happening here, but what is happening is a continued traction in the short-term database. We're now at 77.88. We had 590 buys, 147 sells. We look across, let me go to full screen here, and you can see that we've got, sorry about that. You'll see that we have all the sectors long, 100%. There's a tab up here, sectors long 100%. 86% of all the industry groups are long now. And now we have 77.88. I hope you had an opportunity to see, I didn't see a ton of hits on the video that's describing how to view this and what's going on, and the forward-looking part of the database, and the reason why I follow it like I do and show it to you folks. Pretty good video. I've had good comments on it. I'm not sure it's been widely watched, and possibly maybe even I threatened everybody that we might watch that together. We're not going to do that today, but possibly on Friday, because I do want to make sure a lot of folks see that video, and I'll just play the video and then comment after the fact. But what we're looking at here is the sectors. They're all long. There's only one's been long for 3 days. It's the only negative, but we've got some really nice returns. Capital goods up 10%, up 15 on conglomerates, just 9, between 6 and 12, and transportation has been hot, up 16%. It's right there with energy, so that's interesting. So those of you that have Wavetech breakdown, you can click into these sectors and take a look exactly what's going on. But 100% of every sector is long. 86% of the groups are long. The industry groups are subgroups, and 77% of the symbols are long. So that's pretty bullish, folks. Yeah. So matter of fact, I just decided we'll do that on Friday. We'll watch that video together because I think it's worth watching. If you've seen it already, then maybe you can do something else. Go get a cup of coffee when going through it. It's about a 6.5, 7 minute video. So, all right. So let's go ahead and get into the technicals here. All right, so starting with the S&P. S&P's been, I was talking about that contracting market grid here. You can see it does have some pretty decent support level. I also have the Wavetech webs in here, which are these linear regression lines. And when they get tight together, this really forms like a trend line. It's a ridge, I call it. And that's a pretty good line. That's coming in around 36 handle. And that goes, if you recall, when we were looking at the hourly, that's about where fib target 1 was on the downside. So that's it. But let's take a look here. I've been talking about the daily algos. They continue to tell us that the momentum is going to increase here for at least 2 or 3 more days. And what that's really showing you is the underlying trend that's coming in on the 10-period moving average. So these 3 averages are where the actual where the angle of attack is, and it's well below the markets right now. Like I said, at 38.81, that number is coming up at about 20 handles per day. So we're going to be 37, 37.20. It's coming up, but it's a long ways from where we're currently trading. We're trading at 39 handles. So it's going to take multiple days, and it looks like it's going to stay positive all the way, projected positive for another 4 to 5 days. And that just sets up the, like I said, the support levels here. And I won't show you right now, but there's still a long position off the trade station, off the Wavetech models. Went long at 37.71. It's still long on that trade. It'll probably stay long for a bit here. And I think ultimately we should see a potential break on the 200. I mean, that's pretty much talk of the town, right? Everybody's talking about it. And, you know, we got rejected way back here. We traded up back in August. We traded up to the 200, got a big rejection off of there into new lows. It's a little bit different. This bottom indicator, just real quick here, is actually is suggesting that the 200 is still negative, but it's losing its downside momentum. So it doesn't look like it's going to go positive. To get it positive, it takes multiple weeks of trading above that value, which is right now at the 40.36. So I'm going to continue to expect if we can get them. We've traded briefly above the 200. We traded above it. Actually, yesterday we were up at the 50 handle, 40.50 handle. Still targets around 41.30, 41.40, and that's this fib target number up here. That's 41.30. This first green dot's up here. So expect a generally positive mode, but it looks like we've got some short-term downside, but we should see that this thing stabilizes here in the next day or so. We'll see. We've got 2 more days this week. So next we'll go through the NASDAQ, same scenario. Still have more days of the momentum increasing on the 10. That has really just the effect of moving averages that are dropping off 10 days ago. But those values will start to indicate that we're going to get some support. And the way we're trading right now, it looks like also is this little dragon head, this little formation here is suggesting that we could see some higher prices. If you look, it's interesting because on the August 11,885 was the fib target 1, and we've already been above that. So fib target 2 here right now is at 12,362 and 12,657. And the 200's in the mix there at 12,522. So everything's pointing, at least we're going to test it, or we're going to get above it, trend above it. Don't know that yet. The weeklies are suggesting that is probable, but we need a little more data from that. But right now, as far as everything goes, the support levels are going to hold probably the bottom end of the market grid. We're looking right now at the daily grid, and the downside on the daily grid right now, the low's been 49, and we're trading not quite just below S2 right now. So we've already printed some of those numbers we talked about earlier. So let's go ahead and take a look at the Russell. All right, so the Russell has, like I said, it's been trading above its 200, and this is what I want to show you here. Right now, the 200 is still got a negative slope to the downside, but it's trying to turn up. We're trading here just about now. S3, let me get this right number for you here. S356, we're at 62 low, so we printed definitely some still pressure coming in here, so we're printing down at lows. I'm going to change the scale just a bit, but you can see up here the Russell still has these upward projections here. The 10-period moving average is at 1835. So I think we're really just trying to consolidate this big move up, and we're going to make a decision here in the next couple of days on what's likely to happen there. Okay, let's get into the fun stuff here and get into the treasuries. So amazing enough, I'll change the scale a little bit so you can see it. This is the daily treasuries, and we're breaking through the market grid. It got very narrow over the last couple of days. A lot of it had to do because of Friday's close that was happening there. And well, we got the trolls and the bots in here today. I got rid of them. So anyway, a lot of this stuff that's happening in this pattern is still suggesting that we're going to get this move down in the treasuries to, it's crazy numbers, 364, 354 is a downward target. Possible we're going to get an STX buy signal, so that means we stabilize for a couple of days here. We go over to, let me go over to the trading view, and let's just put TNX up here. And you can see this downward mode coming in here. The algos are suggesting that we're going to continue to see downward pressure, and that the 10-period moving average is going to get into a substantial downtrend, which means there will be overhead resistance all the way up to 385, 390 is going to be resistance now. And so if you're trading the futures on the treasuries, then you're going to be, those are going to be your buy points when you get up to those. You would invert this chart if it was a price chart, it'd be going up, so you'd be buying that dip. But everything is looking like it's going to stay under pressure for multiple days. And the fib targets, like I told you, 364, 354, those are real numbers. Don't seem to make sense, but that's what's going on. Let's go back to TradeStation here, and let's go over to look at the yield curves. It's kind of interesting. The talk of the town is still the 210s, and that seems to be the retail scenario there as far as what they talk about. All the talking heads talk about. It's not really that significant, but we're going to go into the yield curve here just for a few minutes, and I'll draw some of these things that I think are reasonably important to look at, and then try to extrapolate out what some of this might mean. Oh, great. Okay, hang on a second here. I got to hook up my screen share. Oh, we're getting everything up here. All right, let's try this again. All right, so let's go in here and just talk a little bit about the yield curve. I had it all set up, but it blew up on me. But these are the numbers that are out there right now, and I've drawn this before for you. Is basically having we're going to put this up here at 5%, 4, 3, 2, 1. And this is going to be Fed funds. We're going to put the 13-week, the 2-year, the 5-year, 10, and 30 in this spectrum. And right now, the Fed funds actually effective rate, I saw trade at 388 here, and the 13-week is at 412. I'm going to draw this in. This is 412, and then we've got the 2-year at 437. Then this is where it gets interesting. The 5 comes down all the way down to 388. So these are rough numbers. 388 here. Let me fix that. 388. And then the 10, 374, and then the 30 here is going to be 393. And I've been talking about this right, this area right here is that hump that I've been talking about in a curve, and that continues to be pretty obvious. And what I want to talk about here, as far as the markets go on these patterns, is that really what we're looking at is what's called a humpback, not an inverted. It's inverted, but it's inverted strangely, and it's because of all the Fed's activity that they're doing. All of the QTN is right here, and that's pretty obvious. So and it's probably a good strategy if you think about it. So this is where all the selling's going on in the short term, and now we see the 388 on the 5, and then 374 on the 10 here. This is the 10, this is the 5, and then on the 30 there's an uptick. And the 30 on the uptick, there's not a lot of anything going on out here. Almost everything in the economy is this way that happens. The 10-year down, 30-year is not really a material piece of the economy. It's out there for longer term financing, but for the most part, everything's going on right here in this area right here. So that is what's happening with the yield curve. So let's just come back and let's talk a little bit after looking at that. Let's talk a little bit about what that means, and maybe I should go back to that page. Actually, let's just stay on that page here. So let me get off of here. Yeah. So let's just talk a little bit. So what this is meaning for the economy is that this is where really what you're seeing is the Fed's action here, where all the activity is going on, and something's causing this thing to get into a hump. And it has mostly to do with the Fed activity. In the back end, it has to do with the lack of demand that's happening, real estate and other areas on that back end of the curve, back right above, let's see here, in this area right here, I've got where I've got the spot here right now around the 10 and 5 and 10 area, where most of that financing is going on, 10 to 15 year mortgages in here. So that's why you see that dip. There's just no demand there at all. And I think that's what that's going to indicate for the economy, is that ultimately we're going to see less and less demand. So if I go in here and I'm just going to take all this down real quick. This will only take me a minute to draw this in, and I've drawn this before. And well, really, what ultimately I think happens, I'm going to draw in the curve where I think it's going to go. And we're probably going to see 4.5 on Fed funds to 5%. And then we'll ultimately, maybe we'll still have that hump, but we're going to get into a complete inverted yield curve. And how far will this go? Let's say on the 10, I think 350. That's what we're seeing on projections right now. On the both the algos are telling us there's a lot of pressure, and everybody, that's the I guess not the danger, but that's where a lot of confusion comes in the market, is if you're playing that 10-30 area, you're going to have a decent bond market there. So it's all about duration right now, and the shorter the duration, like I said, that's where all the activity is going on. And it's being distorted a little bit right now, I believe, by QT, what's selling there, what's going on, and those are the things that I'm looking at. And so just know that ultimately the Fed, back to the Fed for a minute, the Fed is going to actually look to break the market the best they can, and the only place they're interested in breaking right now is the employment, because every one of these Fed talking heads and presidents of these banks have been around, and that's all they're talking about: employment. Employment's good. We're not in a recession. Until you see everything go on. And I went through some numbers last week, I believe it was, when I went through some of the macro stuff on the channel, and I was talking to you about right now, all I see is maybe employment getting up to about 4.5 at the moment. Maybe that'll get worse if they really do break something. That's what is likely to happen there. So I think I pretty much got everything out there that I wanted to get to. So let's go ahead and we're going to cover. I want to go to the U.S. dollar real quick because I haven't covered the dollar. What time we're getting? I'm getting pretty long in the tooth here for the show, but that's okay. That's what it's about, because I want you to have a good understanding of what's going on. So let's go ahead and take a look at the dollar here. Okay, so dollar's been under pressure. We've gotten all the way down to the 200-day moving average, and the algos are suggesting, I talked about this the other day just briefly, I mentioned it, is that I think the dollar's coming into a support level here. So the decline that we've seen would probably going to stabilize here. The algos are suggesting that we're going to see some dissipation of the downtrend, and right now the 10-period moving average is 108. And you have to remember, I believe, I forget the number right now, but I think it's like 35% of this index is euro. So this has a lot to do with the with the euro dollar mix in there. But we should see some stabilization here, and the algos are suggesting that we're going to get back above the 10-period moving average, but the 10-period moving average is dropping pretty substantially right now, and so about a half a percent per day. So in 4 or 5 days from now, we'll actually be down here at 107 handle, and then we'll probably set up some kind of bottoming formation in here. It looks like the 200 is still positive. It's still got a positive slope, and it looks like all of the algos are suggesting that that's what's going to happen. But let's go to weekly charts here real quick, just to look at this as well. The weekly chart suggests stability for maybe a week or two, and then more decline. So ultimately, the 40-period moving average right now is, I'm just looking at where the algos think we're going. Yeah, we're going to stay stable here. So we probably get sandwiched on around the 200. The 40-week moving average is very similar value. That's at the 105 level. So we should get sandwiched between the 40 and the 21, which is 108, 109 really. And then on the upside on this, around 110.5 is probably going to be the top end of this. And this will be most likely what this market stabilizes and just starts to consolidate. And then we'll find out whether there's more upside, or it just, I think actually looking out, since I'm so deep into it, let's just take a look at the monthly. 10-month moving average is got some pretty decent support here as well at 104. Last trade 106, low 105.34 on this bar so far for the month. So look for, and we're trading on the 106.12 is STX on the monthly. So we're printing already here mid-month down at these key levels here. So just expect to see some stability come back in here, and very likely on going to the long term, looking at this, is what we're really going to see is that the markets are going to just stabilize here, high level consolidation. It'll take several months before there's any big decision whether there's going to be a monster decline in the dollar or something of that sort. Now, if we could just go back for a second here and just talk about what I was in the interest rates, trying to tie all of this stuff together. If rates are back into these yields are going to continue to go down, the big influencer, I know a lot of folks look at the 2, but the influencer really is the 5-10 sector. Those segments of the bond market are going to have the most effect on investors, especially the international folks. They're not going to want, they're probably going to see, you're going to have to make the, if you get that kind of appreciation, it's just going to stabilize the dollar here, so that'll make everything kind of normalize in this range. All right, so let's just go to crude oil, and let's just stick with this monthly theme here. And what crude oil is suggesting, that we have this cap, and you folks have heard this story. 92, 96 is the cap. 92 is to do that from the standpoint of the patterns that are setting up here. Algos are suggesting basically stable underneath here. So just, I'm stuck on this, folks. I'm sorry. 82, 92 is just the story there. And I did see somebody say, how do you get Wavetech? Go to kendallreport.com/Wavetech. And that will get you there. You can find out all about it. So anyway, with the patterns here, let's go to a weekly, but everything tells us that is telling the same story right now. The only thing that is potential, we had this spike down over here to the 76 handle. It doesn't look to me, the algos are suggesting we're going to just stay sideways. And there's nothing here really that's going to change this. I don't see anything at all that is going to influence that we're going to change anything from what we've already seen on that level. So it's kind of a boring story, but it is, and it is, and it isn't. If you're a trader of oil and you have these kind of parameters set up, and you get these, buy low, sell high, right? Buy 82s, you look at patterns that start to set up around these prices that are telling you there's lows, and on the top end, you can just scalp the heck out of these things. You probably get some nice swing trades out of there. So these kind of markets seem boring, but if you're a trader, there's a lot of opportunity here, because now you know the parameters. And I mean, we've been locked in. This is a weekly chart for 5 weeks. You could have traded pretty much these parameters around here, especially looking at the market grid. So if you have a market grid, you can just tie that in. And like if you look at this week's market grid, the high was 89.84, 90.83 was R1, so almost an R1 this week. On the downside, we're looking at the 84.83, and 85 was S2. But you can just trade around in these. A lot of you have been in the trading room. You can just scalp around these market grid numbers on a 1 minute chart. You can just, I call it stealing money. So there's plenty out there that you can do, that really good strategies to work around some of these numbers. These are some of the best trading markets there is. It doesn't have to be a trend. You don't have to be in a market for 3 weeks, 3 months, all that stuff. That the value of that type of trading is good. That's what our products do with stocks. Like, we want to be in longer term trends if we're managing portfolios. From a trader standpoint, this is a gold mine right here. And speaking of gold, let's go ahead and cover that next. All right, so sticking with the weekly gold, as I've been showing you, the algos are suggesting we're going to continue this uptrend, and it looks like we're going to get into some pretty robust trend numbers. And I remember going back, and those of you who've been on the channel, back about a month ago, I said the algos are suggesting we're going to see a monster move on gold. And I thought, why would it do that? Well, if these rate projections I just went through are right, that's definitely going to get you to much higher gold prices, ultimately probably challenging 1,800 and some higher numbers. Right now, there's no Fibonacci numbers here on the weekly. Let's go over to the daily. Nothing there either. The daily suggesting, I mentioned this, I believe yesterday, that really what we're seeing here is that it almost looks like the equity markets, right? We've rallied right up to underneath the 200-day, and it's consolidating here. Algo suggests that it's going to stay positive, but it looks like to me there could be a little minor rollover, maybe a test of the 10-period moving average, but it's rising here right now at about $13 per day. So right now it's at 27. It's going to be 40, and then it'll be 60. So somewhere probably 55, 60 range will be the target on the downside as far as where the support will be. But I think this goes into a consolidation. Yeah, no, I don't think that, just a quick comment, Ronald, I don't think the gold and Dow are going to necessarily, the dollar is going to stabilize. It's going to be a non-factor. It's not going to be going up, and it's not going to be going down. And it is just going to stabilize. So it's not going to be a factor, I don't think. But maybe it is. It's going to be part of the consolidation that the dollar stabilizes while gold goes on. And so I have to be very careful here. I've got getting errors again. I love Windows 11. Not. I have to be careful what I'm clicking on here, folks. Bear with me a second. Okay. But yeah, so all of these patterns on gold, this is daily. We go to weekly. Everything is, all the algos, everything's telling us that there's higher prices. The monthly, just brought that up real quick, is suggesting we're going to get a little more sideways here. So I got pretty long-winded on some of these markets today. So what we're going to end up doing here is I'll go through Bitcoin. I'll come back on screen. We'll kind of summarize everything that I went through today here in just a few minutes. So let's go ahead and take a look at Bitcoin. All right, so been talking about this a lot, and this is kind of a scary chart, folks. And this is interesting. I haven't brought this up before, but we do have some downward projections here, which they're actually funny because it's saying that Bitcoin's going to a negative number, which that just has to do with this swing that's being located. So basically it says Bitcoin's going to zero, which would make Peter Schiff quite happy and other folks, right, that are anti-Bitcoin. I don't see that actually, but I do see this 98 handle, and these algos are just so, I don't know, these have not been around, but this is an update to indicators, so I'm learning as we go too. I've had these a little bit over 2 months now, but this really called this last decline. It was telling us that we're going to see some substantial declines in Bitcoin, and we have. It definitely broke down. We broke through that 18,255 support level I talked about. Once we got through that, then the rest is history from that standpoint. We're really starting in this big downslope, and with all this stuff that we have going on right now with SBF and FTX and all of this, I think it's very interesting. I've been talking to a lot of people. I think I know I did yesterday, that I was on the Spaces the other night. I didn't want to get off. It was one of the best Spaces I think I've ever been on. And there were like 10,000 people on it. Don't even remember who was running it, to be honest with you. But they definitely knew what they were talking about. And it was a very interesting conversation. So there's still a lot of questions out there. We're seeing, this whole FTX thing unfold. Does it get contagion? I don't think it goes beyond the crypto market, but I think there's still a lot of questions and and there's not a lot of answers. And that's going to take a while, especially not just on FTX, but all the people that were actually involved with STX through investment. I mean, Sequoia, venture capital, and a bunch of people threw hundreds of millions of dollars in there. And I think the balance sheet was on a napkin or something. It was really a joke. Some of the entries, there's some leaks and things that have happened. So anyway, but Bitcoin's being affected by this. Market sentiment is being affected, and these algos are just suggesting a really, really bad scene ahead. And it doesn't look like there's any turnaround, especially with PPM1 at a minus 2.77. But if we just look at the algo, it's suggesting next week it's going to be in the 4 handle, minus 4.0. When you get into these whole integers on this PPMs, it's a very, very big number. So let's go ahead and I'll come back up and we'll close out the show here. Didn't get into some of the long-term stuff. We'll do some of that stuff. Just remember, tomorrow is we'll call it Commodities Corner. We're going to go through. We featured a lot of the metals last week. We're just going to keep going through a lot of commodities. I'll be much more disciplined tomorrow on about top of the hour. Tomorrow we'll go through the gold, silver, copper again, and then we'll hit on some of the grains and maybe even start looking at some of the meats and stuff like that. I think it's going to be interesting. I'm going to reach out to somebody that I would love to get on the show. It was one of my first boss when I was in a research department. I'd love to get him up. I'm still trying to get him motivated to come up. I think he can bring a lot of and have a conversation about some of these charts as we look at them. But the whole scenario is still unfolding, and it really comes back to the inflation story. And is this thing peaking? And if it is peaking, where's the bottom? And the bottom's probably not going to be 2% like the Fed thinks. Remember, if you flash back on the Fed, how they were telling us that we were going to be, they wanted to target 2%, and we were at 1%, and they couldn't get it to go up. And then the pandemic happened, and then we got, the new MMT coming in, and they printed trillions of dollars, and now we have inflation, and everything's jacked up. So it looks like a hard way to recover from here. So just a quick update here. What I have on the screen: E-minis are down 18, down to 81. The low so far has been 72. So we're getting down that S2 number I talked about earlier. So I expect that we'll see some more downside in these markets. It doesn't look like there's any chance that we're going to get back above the cash is at 39.71. I don't see a 30 handle rally today and getting back over the 4,000. So we're seeing a couple things happen here. Just in summary, is we're seeing some dissipation of the uptrend that we saw, some of the burning off of the upward momentum, but the algos continue to suggest we're going to have that underlying momentum stay steady enough that even on any retracements, 39, I think the number I came up with on S&P, around 39.40 was I get this right. Yeah, 39.40 would be around the support. Look at those weekly numbers. You have the market grid, bring it up on weekly, and make sure you watch some of those key numbers that are in the pattern. As far as the interest rates go, 374, we printed 372. Everything's stabilizing here. Crazy numbers, folks. And it's hard to talk about 364, 354 on the 10-year. I know many of you are probably going, really, Kendall? You'd think that's the case? I'm reading the numbers. Those are the probabilities, and the algos are suggesting that the yields are going to continue to drop. And if we had this, maybe I should bring up next time and bring up the 10-year futures and look at that, because that would be in an uptrend, and look at it from that standpoint. And it's bullish right now for the bonds, and the bond guys, the 60-40 guys are feeling pretty good, because even with the stock market stabilizing here, the 40 part has got a decent bid in it. And it's, like I said earlier, and going through the yields, it's about duration right now. And if you don't want to take any risk, your best bang for your buck for the next 2 years is that 2-year. I mean, that's the peak of the curve, right? So you can buy 437. That's a good yield for 2 years compared to what you got. If you pull the clock back a year, and you were out there, you were, sub 50 basis points. So this is a big deal. It's a really big deal. We're looking at 3.5% increase, and you got minimal amount of risk on a 2-year maturity. So, but in the real scheme of things, like I was talking about, the maturities on the back end of those curves, that's still going to be a place that there's going to be a decent bid for a little bit here, just because of everything that's going on in the markets. So I think that'll about do it for today. Yeah, we in the final minute or so, and I see somebody talking about a 3-day short setup. Not sure about that. Not enough time to go through that. And appreciate Alternative Contrarian. Appreciate that comment. And yeah, listen, folks. Make sure you hit the like button right before you leave. We've got only 361 watching, and there's been, going from the day show. I'm going to continue to be here every day, and this is going to be the new format for now. We'll see when we come to flipping the clocks back, and I'm going to have to get up at 4:30 to do the show at the same time. We'll see how that works out. But for now, we're staying with it. Maybe we go back when the clock switch to the evening shows, and we'll just see how everybody responds. And I hate moving everybody around. I think there's a lot of people that were watching at night that missed that, because it really set up the folks in Europe, especially the London Open. So it is what it is, folks. Appreciate everybody watching. Hit the like button before you leave. We'll see everybody in the live room in a couple hours, and look forward to seeing you there. And if you remember, if you get the indicators, you get 30 days in the live room. So there's some great folks in there, including myself. So anyway, thanks again, everyone. We'll talk to you tomorrow, same time. Have a great day trading, and we'll see you tomorrow.